good morning. We greet you from everywhere you're watching this video from. Welcome back to this edition of the video. This is Gold Digit Forex Academy, and in this video, we'll be talking about the concept of liquidity, right? How do you analyze your naked chart? What is liquidity concept all about, right? So in liquidity concept, in first trading, we know liquidity concept as the price level refers to the ability to buy or to sell a currency pair at a stable price without what causing significant price fluctuations. They said high liquidity at a specific price level means there are enough buyers and sellers at that level, allowing for smooth execution of trades without drastically impacting the price. Essentially, a high liquidity price level ensures that trades can be executed quickly at the expected price, minimizing slippage and reducing market volatility. What does that simply mean? It's just a price level where buyers and sellers are positioned themselves, they've positioned their orders ready to take trades. Market makers don't trade like retail traders, like taking instant market execution. They have positioned themselves at a specific price level. This is where all the orders that they want to use to trade, all the $1 billion they want to use to trade, is being rested in that price level. Do you understand? So that is liquidity price level. It's just a price level where big market players like the buyers or the sellers are interested in getting into the market, and you know you don't want to trade against the market. Now, as a trader, you want to trade alongside with these market makers. You want to trade alongside with the liquidity. Price moves from one liquidity area to the next liquidity area. Now, we have two different types of liquidity concept, which I'm going to also talk in this video. We have the buy side liquidity, which refers to the liquidity provided by the buyers in the market. It represents the demand of a currency pair. High buy side liquidity means there are many buyers willing to purchase the currency pair, making it easier to sell without affecting the price too much. Right? Buyers are positioned themselves in a support area. So whenever you see a support area or a demand area, most likely we have liquidity resting at that point. Means there are a lot of buyers that are resting their position at that point. So whenever price gets to that level, we tend to see price rejecting of that level and go in that bullish momentum. And the opposite is the sell side liquidity. This refers to the liquidity provided by the sellers in the market. It represents the supply of a currency pair. High sell side liquidity means that there are many sellers willing to sell in that particular currency pair. Now, looking at this ranging market, for example, this resistance here, liquidity is being rested here. Why? Because there are many sellers that have positioned their orders in this region, in this zone, right, ready to take the trade downwards. Same thing with the buy side. There are a lot of buyers who have positioned themselves right here. So anytime price comes to this demand zone and gets rejected and just probably sweep out a zone right here or deep into this zone right here, it means it has executed, it has taken out liquidity that is resting here and pushes forward. Price moves from one liquidity area to the next liquidity area. So if we are trading a ranging market, this is how we kind of see where liquidity is resting. Now look at this downtrend. How will you check out the liquidity areas in this downtrend momentum? Let's use this info line. Let's see from here, you can see liquidity is resting right here. Liquidity is also resting right here. Every swing point, right, is a point where liquidity is resting in the market. Right here. All of these points is where liquidity is resting right here. So don't mind the lines, it might not be straight, but you understand what I'm saying. So same thing with the uptrend. You can see all of this is where liquidity is resting. So here we most SMC traders will call it break of market structure. But the idea, the psychology behind it is that liquidity is resting below all of these swing points. Right? So if price wants to have a strong bullish momentum, it needs liquidity. Liquidity acts like a fuel, right? It acts like a fuel that pushes the market. So if price wants to have a strong momentum upward or downwards, it needs liquidity to power it off, just like your fuel. So whenever price wants to go upward, right, we can expect price to play out this way. Let's say you want to have um, a downtrend like this. We have this, we have this, we have this. So if price wants to take a strong momentum, right, it can decide to take out, can just dip down a little bit and come and take out the sell side liquidity that is resting here, right? Sorry, the buy side liquidity that is resting here, right? So when it sweep out this liquidity that is resting at this point, right, it will sweep the liquidity out and go strongly. Like it can just have a very strong pull down to the downside, right? So this is how it moves. This is how it moves. Now let's say the liquidity is resting right here. Price takes out the liquidity, right? So this is what it is. Do you understand? So now let's go into the chart and see all of these citations in real chart. So we can see this is a downtrend, but this is an uptrend. Now, liquidity does not just rest in a support and resistance level, right? It also rests in trend lines. There's liquidity resting in trend lines, right? And so we treat trend line just as the same way we treat our support and resistance. But why this is even much more better is because trend lines also help us to see who is in charge of the market, what is the current trend of the market. So let's use this trend line, for example. So you can see the price has been having bullish momentum for some couple of time. You can see. Let me adjust the trend line. Perfect. Now I explained something during the tutorial for when I was teaching you guys on trend line strategies, right? Your trend line should come at a support area, right? Should always start from your support area, just like this. You can see clearly that this is a support area. So that is where I started my source points from. All of this zone is a support area. So that is where I started my trend line from, right? So that's how you draw your trend line. Now we have this right here. So how do we mark out our liquidity level? We can cite liquidity resting at this point, which is the source point. Liquidity resting here, liquidity resting here, right? Let's quickly mark out those liquidity areas. You can see liquidity, you put a little bit pullback right here. You know, this is the 1 hour time frame. This is another liquidity resting here. We have another liquidity resting here. Same here. We have liquidity resting here. Now let's analyze this chart carefully. You can see liquidity resting here. Price has been respecting all of these higher lows, right? Price kept respecting all of these higher lows as price plays forward. Now let's go down to a 5 minute or 15 minute time frame. Let's scale down to 5 minute time frame. Now that's what we just want to do. We want to get on 1 hour time frame, mark out the liquidity areas, and we move forward. So I'll quickly explain that as we move forward in the analysis. So all those liquidity price level that I drew in the previous chart is what we can see here clearly, right? And look at this. There's also liquidity resting at this point. So people call it change of market structure, which is coach, but it's also liquidity, right? So sorry about that. So we have this liquidity being swept out of this point. We have liquidity here. You can see price respect all of these liquidity areas. Now look at this. Look at this. This is what I mean, guys. Look at this. I told you guys, right? There's liquidity resting at this point, right? There are a lot of buyers. The one that's placed their order. This is a demand zone, right? You can also see it as a sell side liquidity. This is a sell side liquidity. resting at this point. So we expect price to dip down and reverse. So playing price forward, you can see how price dipped into this liquidity and pushed price forward. So whereas not all liquidity holds a lot of volume, but any liquidity price level that holds volume, you tend to see a rejection of that zone, right? And what also confirms after the sweep of the liquidity, you want to expect a fair value gap for a confirmation, right? I'm just explaining how you guys can trade this concept. When you see a fair value gap after a liquidity sweep, you expect price to what? Respect that fair value gap, tap into that fair value gap, and you take your trade from there. This is it. So how do you set your entries? You want to enter your long position right after price retest. It has to retest. If it is not retesting, we are not taking the trade, right? We don't want to be part of that bullish momentum. So after price retest, look at the latest swing that price respected previously, which is this point, right? This is the latest swing area, and this is where we are targeting as our take profit area, right here. So after that bit done, your stop loss will just be right below either the fair value gap, just below it a bit, and voila, you see this is how you take the trade using liquidity concept, right? Using liquidity concept. Now let's check out another front. Price got close to the liquidity area and pushed price forward. Now you see price broke into this liquidity area right here and broke through the trend line. Now our major focus now is because price has broken the trend line, and I told you trend line is also a liquidity price level. Now whenever you see price breaking through the trend line, you see most of the time it breaks through with a fair value gap, or let me say displacement, which is this candle right here. It breaks through with a displacement, right? Price tapped into that trend line, as you can see at this point, but rejected. Like, you can see that pull back to the upside. But because of the bearish momentum, it broke through it once again. So once it maybe broke through it with a displacement, we are not going to still take this trade yet. We want price to return back to that favorable gap, just like I explained. So anytime you have liquidity being taken or being broken, we expect price to retest in that zone, right? Expect price to retest in that zone. And this is where you want to take your entries. You want to go short at this or 50% of the range. So let's say you're entering here. Your stop loss right below, right above the fair value gap area. You can target the next swing point as your take profit area, or you can just do 1 to 2 risk reward ratio. So this is the next swing point. This is the next liquidity area. Remember, we marked this already. Yeah, can you see? We marked that already from the higher time frame. This is the best way to take liquidity concept, because when you analyze on your higher time frame, you get to catch a lot of more positions, like a lot of more pips than citing liquidity areas in a smaller time frame. So you do your analysis on higher time frame and scale down to smaller time frame for entries. So this is where you want to target as your next target. Why? Because price moves from one liquidity area to the next liquidity area. So look at this. We got this first trade, we got this second trade successfully because we target the next liquidity areas. And okay, price broke through it, gave a retest, approaching the next liquidity area, but price did not later reach at that zone, right? So now look at this. Price broke through these liquidity areas. Look at this. Fair value gaps, right? This is one fair value gap. This is the second fair value gap below the range. So let's say we mark out this. We've broken through the liquidity area. So what we want to look out for is a fair value gap, right? A fair value gap simply means when there is displacement in the market, when there's a lot of volume and momentum in the market, that's when you see a fair value gap. So it is a gap in price by which, um, if it is a bearish fair value gap, it means there's a volume of sellers at that particular range. It's not giving the buyers to even step in at all. There was no room for buyers to step into that trade. So this is, let's go short. I want to go short here. And what are you going to target? Next liquidity areas. Just that. Just that. So you see, take your stop loss right above that. Now, this concept, you see that you can trade it confidently, right? Confidently, without like risking so much of your capital, just from one liquidity area to the next liquidity area. Now, after taking this trade, you see price rejected at this next liquidity area. that we already marked previously. Let me go back to that position. Look at this. Let's fine tune it the way it is. So look at this. We already marked this from a higher time frame. Remember, we already marked this from a higher time frame. And what happened in a lower time frame? Price tend to what? Respected it, right? Respected that zone and pushed to the upside. Now, ordinarily, this is what we would have done. Price has taken out this liquidity, and I said you have to look out for a fair value gap, right? The same method. Look at the fair value gap here. And what did I say next? I said you should look out for a retest after the fair value gap. You want to go long right here. This is where you want to go long. Your stop loss just below that zone, right? Just below the fair value gap, and target the next liquidity area. Now let's see if price hits TP with this. Let's keep playing price forward and see if we finally hit TP. Now look at this. We finally hit TP, right? This is a very good trade. Now look at this opportunity right here. Price did not break above that liquidity area. Why? Because we got rejections. Now what are we going to look out for after price rejected? Right? Look at this. We have fair value gap right here, but it got mitigated. It got filled quickly. Look at this next fair value gap right here. So let's take this. Now, if we look at this clearly, very clearly, let's zoom out so we can all understand. Look at this. When price respected it, there was no bearish fair value gap. No bearish fair value gap. This was covered 50% of the candle. So I won't want to consider this a fair value gap, right? I don't want to consider this as a fair value. Though it got a bearish a displacement. But look at this week. The week covered more than 50% of this candle. So I'm not going to consider this as a fair value gap because we already covered 50% of the body candlestick. So got a week out as well. Would have considered this a fair value gap, this particular candle as a fair value gap, but the week covered more than 50% of it as well. So this is an invalid fair value gap. We can't take this as a fair value gap. Now let's keep waiting. I said whenever you see price taking out liquidity, you want to see a fair value gap. That is when you want to take your entries. Now look at this. We got the fair value gap right here. So this is where we are looking out to enter. You don't want to take your trade right immediately, right? You want to take your trade when price retest that fair value gap. That is the best way. Without any retest, we are not taking any trade, right? Without the retest, we are not going to take a trade. So this is it. We want to go short right here at the tip, right? And you want to target just your stop loss a little bit above your the fair value gap. So it depends on your style. So for me, I usually prefer 10 to 15 pips for my stop loss um area. So it depends on what suits you well. So or you can choose the recent swing, which is this point, as your stop loss area. You can choose any price level that suits your stop loss level. So I want to target the next liquidity area, but right there, the next liquidity area is here, right? So let's play price forward, following the same concept. Can you see? We almost hit that liquidity area, but price pushed up to the upside real quick. So this is how you trade liquidity area. Just start from your higher time frame, scale down. Make sure that you are looking at those zones carefully. Now let me go back to the one hour time frame so I can explain all of that concept again. So you can see where I marked as my liquidity area. Now look at all of this. These are all the liquidity areas I marked from the trend line. Can you see? Respecting the trend line. Can you see? This was where I started from. This is a pullback, right? So I marked it as a liquidity area. Look at this. Look at this. Now let's see. After all of that has been done, look at those winning trades that we had clearly. Now let's check out this current price action. Where are the liquidity area in this current price action? I'm going to take out all of this. So if you want to quickly, I believe you must have just go back to the how we started this video, screenshot those texts so you can understand how we started, right? So you can understand how we started from this range, all of this text. So I'm going to wipe out all this text right now so we can analyze the current happening. Look at what price is actually doing, so we can anticipate for the next big move. Right? Take your real line starting from here. You don't need the trend line to be perfect, right? Now let's fine tune that. Let's fine tune the trend line to start from here. Can you see? Beautifully placed. Now let's start backing out our liquidity areas. Mark out your liquidity areas starting from this, which is the resistance point. We have this, we have this, so we have this as a liquidity area as well. So your lows, we can consider this if you wish, right? This is a liquidity area. You can consider this, so we can be able to scalp as well. Look at liquidity area right here. So I think we are done. So what you want to do is right now is to go on your 5 minute time frame and expect price to play forward, right? Look at all of these liquidity areas. We're expecting price to what? Respect now. Price has respected this trend line, taking out liquidity. Before we take our entry, remember the confluence. We want to have a fair value gap. We must see a bearish fair value gap and wait for price to retest in that fair value gap, and we take our sell all the way to the downside. So we expect a fair value gap here and retest in that fair value gap, and we target here as our next take profit. Now, if price breaks above this trend line as well with a fair value gap, with a bullish fair value gap, we also want price to retest that fair value gap and we take price all the way here as our take profit. See, with this, we'll be able to take so much opportunity in the market. So this is what we're expecting. If price gives us a bearish fair value gap right here, we expect price to what? Retest that fair value gap. We expect price to what? To give us a pull back here. We test this fair value gap. We take our entry, our target all the way to the downside. Right? We target all the way here as our take profit. Now, if price breaks above this zone, this is what we're expecting. We're expecting a fair value gap around this zone. Let's say we have a fair value gap here. So we expect price to play out. Sorry about that. We expect price to break out right here, giving us a fair value gap in that zone. Coming back here to fill that fair value gap area and target all the way here. So this is what we're expecting. This is what we're expecting currently on the 5 minute time frame. This is Euro USD. This is not a signal. This is just an analysis. So if you want to take this trade, make sure you follow the step-by-step guide. So this is what is happening. Can you see? This is what is happening. We can fine tune it so that we can have accurate touches. So we have this. Zoom out. You can see price resting at that zone. So same thing here. Make sure that you fine tune all of those zones. Ensure you fine tune all of the zones carefully. Look at this price level. Look at this price level. Right? So always fine tune your line so that you can get maximum accuracy. Right? So you have something like this as well. So that's just that for the video. Combining your trend line with liquidity areas. Can you see? So we can decide to take highlight this as well. We kind of missed this. So you see, this is how you trade liquidity price level, right? This is how you trade the liquidity price level. Expect price to come, take out liquidity, give us a fair value gap, and we take our entries. Do you understand? So if you like this video, if you find value in this video, kindly leave a comment, like this video, and share it to others. See you guys in the next video. Cheers.